Hi everyone and welcome to another video. Today I want to touch on Elliot waves and risk and reward. Now I've drawn a typical Elliot wave up here for anyone who might not be familiar with it, but it's basically just a particular pattern that has certain waves in it. We call these wave 2, wave 3, wave 4, wave 5, and we're trading from this 4. Once this is complete, we're trading and looking for our target at 5. So prices have to close above this blue line for the 4 to be completed, and so we'll jump forward and we'll see what happens. I've also drawn in where we might get a dividend if we're still in the trade, and also the calculation of the conservative target, which I tend to always go for. It often gets a bit choppy trying to push out into the body of this, but it depends. Sometimes a price action just goes straight through that and into that, and but that's for more experienced traders. But I definitely recommend going for the conservative target. So we'll see what happens here. What we're going to do now is we're looking to trade this. So what we're going to do is we're going to set up our risk and reward. That basically means we've got to see how much for every dollar we risk, what is our potential profit. We'll assume we get in about the same price as what it closed at, and we'll just pop that a cent under the low, and we'll run it up to here, 1483. Okay, so what it's got is it's saying, okay, this is your risk of $1.01, and this is your reward, $5.04. So you're basically getting a risk to reward ratio of $4.97 for every dollar that you risk. So essentially it's risk $1, make 5. Risk 100, make 500, for example. So now we've all got that set up. We'll see if we get in at 980, and then we'll follow the prices, and we'll see if we're either stopped out where it goes under 878, or we hit our target of $14.83. I'll just jump forward. Week by week, this is weekly data, and I've also written in where we might, if we're fortunate enough, get a dividend if we're still in the trade. Depends on the time frame, obviously, but sometimes you do pick up a dividend along the way, and that's a bonus because it's not factored in to your risk and reward. So yeah, like I said, that's just a bonus. And now let's see what happens. We'll go forward another week. Pretty solid week. We'd be quietly pleased that at least over the last 2 weeks, it's sort of gone our way, and the 4 is still, well, you're still in it. That's always what you want to be. Another week, and it's a fairly strong week. And if we look down to another indicator I use that I won't go into, this is sort of like the long-term and short-term strength of the price action. We can see that it's improving here in the short term, and in fact the long term, which was declining, the strength in prices is now flattening out. So again, that's just another confirmation that if I was in this and I saw that and I saw this, I'd be at least quietly pleased that it's everything looks like it's going the right way. So we'll jump forward another week, and yet another week, and another week, and we can see now that the strength of that is, again, as an aside, the strength down here is improving. So that's a good sign. We see for the week it started down low and finished in more positive territory. So here we go. So we're basically at the end of January 2020. Probably been in what now? 2 months. On we go. We're getting pretty close to that 1483, and there we go. So during this week, we managed to close our position at 1483 and take our 400. Well, if we say we risked 100 to make 497 profit, we've taken our 497 profit. So that's a great example of Elliot waves, and it's also a very good example of sticking to conservative targets, and also checking out and seeing what your risk to reward ratio is. Generally, the higher the better, but there's a certain point where if it's too high, I guess you could argue then the price movements would be too large, but to be expected, but that's not necessarily true. But 1 to 3 would definitely be a minimum for experienced traders. But I think if you're setting out and you want to use this and it's got you thinking, go for 1 to 5. Not just because this chart worked out, it just keeps you in. It helps you pay for your losses, put it that way, because we're not going to get them all right. So that's why you need a good reward for what you're risking. So I hope you enjoyed that video. One last thing I do want to point out is if you had broken, say, the rules in the sense of you didn't stick to your rules of selling out at 1483 because you thought, oh, it's going to go even higher now, look at it go. I just want to point out the folly of that. In a couple of weeks' time, we obviously have the March 2020 meltdown for obvious reasons, and I don't think your mental health nor your bank balance would have coped very well with this volatile week. So please, when you start out, always stick to your targets. I mean, anyone and everyone should, but I just try and emphasise that for new people, because hope, fear and greed will send you broke. Look, I hope you enjoyed this video. Thanks for watching, and all the best.